Hi everyone, welcome to this webinar, Article 6 Paris Agreements Trick or Treat. We'll give people a few minutes to log in and then we'll start the webinar. Hi everyone, I see the audience is getting complete. So again, a warm welcome to Wait's webinar on Article 6, which we have chosen to call Paris Agreements Trick or Treat. My name is Hege Fjellheim. I head up the carbon analysis here at Wait. And yeah, it's that time of the year again. Not talking about Halloween now, but about COP. It's only a few weeks to go before negotiators meet again in Baku, where again, the rules for international carbon trading under Article 6 is a key topic. We may be in for a trick again, but hopefully it's going to be a treat this time. So I'm very, very delighted to have Olga Ghassanzadeh to join us today to discuss the ins and outs of Article 6. And for the crowd that have joined us today, she's a celebrity. She probably doesn't need any further introduction. But Olga is a member of the 6.4 Supervisory Board and a former chair of that board. She has years of experience in carbon markets and as a negotiator, and she's joining us here today in her personal capacity. I'm equally delighted to have our very own Lisa Celia joining. I say our very own because she works as a contributing editor here at Wait, but she also works as a lecturer at Johns Hopkins University. She's joining us very early morning from Washington. Very warm welcome to you as well, Lisa. And last but not least, our truly very own Fitri Volandari. She's a global carbon analyst here at Wait. And yeah, needless to say, she follows the Article 6 negotiations very closely. She also is deep into the voluntary carbon market as an analyst. So who's Wait? Quickly. We are an analysis company looking at carbon and renewable energy and market analytics. So we cover green markets at large, renewable power, renewable fuels. I guess for you guys joining us, this webinar, carbon is the most interesting part, both the compliance parts of carbon and also the voluntary parts of carbon and the international carbon crediting scene. So please reach out if you're interested to hear more about what we offer, and feel free to contact any of us after the webinar. So today's agenda, or let me first give some housekeeping rules to keep you aware of how we're going to run this webinar. First of all, you're all muted. That's not because we don't want to hear from you. We really want to hear your questions and for you to interact and ask questions to Olga and our experts. But we have a big attendance today, so we have muted you all, and please use the Q&A button at the bottom of your screens and post your questions. Given the complexity of the issue we're about to enter, I just want to say no questions are too stupid and no questions are too nerdy. So just go ahead. We will pick up on the questions as we go, but we also have a dedicated Q&A section at the very end. So we'll try to answer as many questions as possible during this hour of our webinar. Also, you will receive the recordings by email within a few days, so that you know. Yes, I think our agenda is pretty straightforward. We want to do first an intro to like the big picture of Article 6. Where does Article 6 sit in the big context of international climate talks? And then dive into the state of Article 6 negotiations and what are the key issues at stake ahead of COP29. This will be done by Lisa and Fitri. Then we'll have an extensive dialogue with our Wait experts with Olga, which is the main part of this webinar. And this is where I want you to post your questions, and we'll try to answer as much as possible. So with that, let's get on with it. Lisa, I give you the floor to start.
Thank you, Hege. Hello, everybody. Good morning from Washington area. I'm actually outside of Washington, D.C. So we wanted to present a context for the Article 6 negotiations because Many of the people who have started being UNFCCC watchers later in life or in recent years are familiar with Article 6 and the Paris Agreement and sort of where we're at now in the negotiations, but have perhaps lost sight because it was decades ago of where this all came from. The Kyoto Protocol, the world that we lived in from 2000 to 2020, and that many of the structures we're talking about arranging now under Article 6 were already present in a different way in the Kyoto Protocol world, as I'm calling it here. That was mainly the clean development mechanism, one of the flexible mechanisms of the Kyoto Protocol. And so that's what many of the parties negotiating now and many of the stakeholders in this process, including those with experience in voluntary markets, are used to. And this is where many of the concepts involved come from. So I put the old UNFCCC logo and juxtaposed it to the new one. So the Kyoto Protocol, whose second commitment period actually just ended in 2020, it's not that long ago, was structured obviously very differently than the Paris Agreement, and the Paris Agreement's structures have sprung from it. So just to look at the world back then, when many of these things were set up, the key difference is, of course, that only industrialized countries had quantified targets. So when we're talking our NDCs now, every country has an NDC. Back then, it didn't. And there was a cap under the Kyoto Protocol, and there were allowance units called AAUs. And we'll be talking to Olga later, who negotiated on behalf of a country that had a target and had AAUs that were, then there were other projects that transacted. There was the joint implementation and the clean development mechanism. Those were the concept of offsets and having projects in countries that can then sell the credits from those projects to countries that are industrialized and can use them towards their targets. This was all started under the Kyoto framework. Parties are the only actual users of the units under this system as they are now, because the demand from the private sector, which we now identify with because of voluntary markets as being corporates also being interested in carbon credits, that was only created because private sector companies were allowed to use these credits for compliance with their domestic emissions trading program. So the EU, for instance, created a domestic EU-wide emissions trading program to achieve its targets, collective targets under the Kyoto Protocol, and allowed covered entities to use the credits under the flexible mechanisms of the Kyoto Protocol to achieve those. And this was all done by the UN. The UN regulated it all. Private carbon credit organizations were not involved. There were designated national authorities. The CDM had an executive board, the JI had a supervisory board, and so we're seeing this type of entity reflected in the Paris version with the SBI. So parallel to this was running at that time, very small, sort of parallel private offset world, which has now evolved into the voluntary market. It was more on a retail basis. Private companies could make green claims and purchase environmental attributes to meet those claims, carbon credits. And in the absence of any sort of structure, while the Paris Agreement was being hashed out and Article 6 was emerging, these sort of filled the void. So now we have transactions that go through project developers, aggregators, marketers, and brokers. And these entities are big players in the Paris Agreement Article 6 world that we're in now. And some companies back then, on a voluntary basis, used the credits such as CERs, which are product of the Kyoto Protocol world, to comply with their targets, and sort of making them equal to voluntary credits. Now, why am I going back to the world and the evolution? It's because where we find ourselves now is at a sort of interface between the world as the UN is structured and the world of voluntary markets that has emerged in the interim and taken over some of the roles of these structures. And so that's why many of those that are players in the carbon credit world are also so intently following the negotiations, because they are intricately connected at this point. And many of the stakeholders are very interested in what is happening with decisions on Article 6 that facilitate these transactions of credits. With that, I think it's a good segue into a little explanation of the main difference here, and that is corresponding adjustments. So in the Kyoto world, not everybody had a target, and in the Paris world, that was the big difference for the Paris Agreement, is that every party has taken on a nationally determined contribution, a target in whatever form. In the Kyoto world, it was the industrialized countries had quantified targets, usually measured as an emissions reduction from a given base year, so measured in tons CO2, that credits could be applied towards. And in the new Paris world, the NDCs are not always defined in such a narrow framework. You can have an NDC that talks about intensity or emissions related to a business as usual scenario, as opposed to from a certain base year. So the way that countries express their NDCs is different, and therefore using credits towards meeting that NDC is trickier. And especially if you're trying to accommodate having sold some of your mitigation outcomes to another country that is using it towards its NDC, how do you, quote, make up for that? How do you account for that in your inventory, in your accounting, in your reporting, in what you are held accountable for towards meeting your NDC on the global stage? So a corresponding adjustment is just that form of making up for it or foregoing the credit that you have sold to another entity so that it can meet its target. And this is a classic illustration. There's many of them out there. I chose this one because it's nice and yellow, the ITMO, the internationally transferable mitigation outcome, as it changes hands. And so the question is, how does the seller country prove that it is in fact overachieved what it has set out to do in its NDC, and sort of pretend that it didn't? Because that's what is necessary to account for the fact that that mitigation outcome is now on the docket of or credited towards another entity. And this throws a wrench in a lot of the structures that came about under the Kyoto system, because the seller countries now have an obligation to somehow account for that absence. Otherwise, it's not a zero-sum game and the environment is not being helped. The mitigation outcome that was achieved somewhere was only achieved once. And if one country gets credit for it, then the other country cannot take credit for it. And that's tricky when you try to combine these structures with what we're used to as voluntary transactions, where there is not a national government that is using that entity or that unit towards a national target. So the questions get thrown up about what if the balancing does not work out in retrospect, if the overachievement of an emissions reduction target did not take place, and therefore the foregone emission was not actually foregone. How does that get accounted for? Where in this entire process of commoditizing the units of mitigation does that get reflected? So we have big discussions under Article 6 about authorization from the country that is doing the selling and the buying. Where does the authorization, where does the transfer fall? At what point is there an obligation to prove that the making up for this transfer has taken place? And that's why when we get into the nitty-gritty with FITRI about how this can actually occur, how you can codify in this agreement, in Article 6 text, that this is happening and how it should happen, that's what this is all about, and that's why it's so important. So just wanted to provide context for why we care about these individual wordings in the negotiations and why countries take such strong stances on these issues, because it matters for them being able to achieve their NDCs properly and in a way that actually helps the environment as a whole, because it's reducing net emissions globally. All right, with that, I'm going to turn it over to FITRI to get more into the details.
Thank you, Lisa. So yeah, I think as what Lisa says before about the whole concept of Article 6, I think it's just important to just go back quite a bit since a decade ago, because believe it or not, we're like a decade in. So the whole concept of Article 6 was born. which is to enable the global carbon trading, aim at help, countries, as what Lisa said, aim at helping countries achieve emissions reductions where it's most cost effective. And so basically in 2015, 2016, the whole concept of Article 6 was born. We have like Article 6.2, which governs cooperative approach between countries with the most internationally transferred mitigation outcomes transactions. And we have Article 6.4, which most people refer to as the new CDM, which established a global carbon market for transacting greenhouse gas mitigation. Or I think now we have like a new acronym for it already. It's called PACM, Paris Agreement Credit Mechanism. But then again, as we know, all the Article 6 has been around since Paris Agreement negotiators could not agree on its details for years, leaving carbon trading activity and various domestic and voluntary market to develop without UN guidance for the better part of the last decade. And yeah, the disagreements varies to how to carry forward CDM credits, double counting, which something that Lisa touched upon before, transparency and accountability and so on. And it lasts until 2021, until Glasgow. So in COP26 in Glasgow, we finally resulted in a more concrete rules under Article 6 that allows countries to set up the administrative infrastructure to undertake such government-to-government transactions. The Article 6 for Supervisory Body was formed there. But again, in the past 2 years in COP27 and also last year in Dubai, we see that there were another stalemate-ish. The recommendations from the supervisory body, the 6-4 supervisory body on the methodology and removal got rejected in the past 2 years. But then just before COP, in the pre-COP in Baku this year, we noticed some announcement here where the Article 6-4 supervisory body or the SBM adopted methodology and removal tax as standards. And now what happened at COP29 is remains to be seen, I would say. Third time's its charm. As we've mentioned before with Bowert's slide from Ayuta here, since Glasgow, we've seen that countries have been moving forward with bilateral deals in which one country's under 6.2, in which one country pays for emission reductions in another country and gets credits of it, while the recipient nation benefits from the foreign investments involved. We've seen that, Switzerland has been leading on the several pilot agreements with, Bangkok, Ghana, and also several other countries. Singapore also have signed, some bilateral agreements as well with Ghana and also with Papua, and Sweden as well. So, also I think to top it off, I think just last week, the first ever centralized review under Article 6 is already taking place in Bonn. So 6 countries, Suriname, Guyana, Thailand, Ghana, Switzerland, and one other country have submitted their initial reports under the centralized accounting and reporting platform, which serves as an interim solution while the negotiations still going on. So as you can see, while the negotiations are still going on, there's already some stuff going on under the Article 6.2. So what's left? Pending issues for COP29. So earlier this month, during pre-COP in Baku, climate diplomats gathered at a technical workshop ahead of next month's annual COP, seeking consensus on key issues, such as authorization, sequencing and inconsistencies, the agreed electronic format, first transfers, and the registries. And while they agreed on the overarching principles such as transparency and environmental integrity, the how to achieve those remains contentious. So, critical issues such as the registries, the interoperability between registries, which we will go in depth later on, and also the functionality, whether it should be pull and view versus pull and view and transaction. And also with regards to authorizations, or whether or not it should be a single process or a multi-step process, where one options for one options for like authorization, authorizing the cooperative approach, and then another process for authorizing the actual tradable units, or like another process for like authorizing the entities and the contents and format of the revocation, whether or not it should be a voluntary form, whether or not it should be a mandatory form, or maybe no form at all. And revocation, which also something that sparks a lot of debate between parties, because basically revocation of authorizations would invalidate an ITMOS, removing its ability to count towards any party or entity. And then there's an issue with regards to sequencing and inconsistencies about how and when inconsistencies should be addressed. So basically, it's about what should happen when, which also something that we'll discuss later, and the definition of first transfer. But then again, among these 5 issues, we see that the authorizations and registries are like the two main issues that parties have difficulties to reach agreement on. So we'll go next, to the conflicting views on revocation, and authorizations. So as you can see here, basically the debate centers around the idea where actually in the life cycle of an ITMOS, international trade mitigation outcomes, the units, that authorization can happen. Because what we all understand is that we have like the authorizations and also first transfer, but actually in between those processes, there are actually a lot of things going on. There's like initial report submissions, technical expert review, the agreed electronic format submissions, corresponding adjustments, which ideally should be triggered by first transfer, and also the BTR submission with the updated initial report after the first transfer. So again, the debate centers around when actually in this whole process that revocation should be allowed, whether parties actually should be allowed to revoke authorizations at all, and when, and if so, when it should be allowed. Because basically the text from the intersessional meeting in Bonn earlier this year in June, it contained 8 options of for when revocations should occur, whether it should never occur at all, whether it can happen anytime between this, or whether only if the ITMOS has not been first transfer, which is something that could happen here, or whether it could happen only under extreme circumstances, which is again another question mark, because what is actually extreme circumstances? So parties have different different opinions on this, because basically Switzerland and the EU, we know that they oppose revocation very much, as it creates uncertainty for the buyer entity. And Switzerland also highlighted the lengthy time gap here between authorizations and also first transfer, because usually this process could last for like up to 2 years. So if revocation should be allowed at all, Switzerland argues that it must be closely linked to the initial authorizations rather than first transfer, because it would be way too late. And in addition to that, Switzerland and also IOSIS also suggested that there's a no tax option for revocation under 6.2, which to allow parties basically to manage revocation on their own terms. Meanwhile, Morocco, the so-called African group, and like-minded developing countries, and also the US, support allowing late authorizations for the Article 6.4 emission reductions, and as well as revocations of ITMOS. So as you can see here, there's like a very strong different views on when actually revocation, both for both for Article 6.2 and also for mitigation contribution units in Article 6.4, whether or not it should be allowed, and then when actually, if it's allowed, it should be allowed. And next, we will go to the other topics, conflicting views on the registries, which will be taken by Lisa. You're on mute, Lisa, sorry.
Hi. So one of the main conflicts going into the COP is about different views on registries. Parties are having a lot of trouble finding common ground there because there's so many various entities involved. And when we were discussing this with Olga beforehand, we were trying to find good analogies for what is a registry under various contexts. And I was thinking that it should be depicted like a library, because you can take out a book and then put it back again, and you can transfer books between libraries. But we decided to go more with a warehouse concept, because a warehouse actually contains the assets that you can then remove when you purchase them. But there's also a database of the warehouse, what's in that warehouse. So when we get to the discussion with Olga, we'll talk about the different characterizations of registries that kind of make it clear why the different parties want different accessibility or intercommunicability between the different registries. So we have the actual mechanism registry for 6.4, the PACM. And then there's the international registry, as in the big one that should countries not have their own independent national registry like the UK does, or the Japan with its JCM, they can have a registry, have it in the international registry. So many countries that don't have one that they want to have function independently, and that is their national registry, it would be in the international registry. That affects a lot of developing countries. So for them, it's very important that the international registry has as much functionality as possible, because that is where their assets will be transacted. Other countries, the US and Japan in this case also, prefer to have the registries that are the viewability of the registry be like something that you can look at, but not necessarily transfer credits to, transfer the ITMOs, the actual assets to. When we're talking about the underlying asset, the ITMO itself, that's what countries care about. That is the thing that can be transferred, as opposed to just looking at where it is and where it is being held. So there's some conflict about whether registries and to what extent they should be serving solely a tracking purpose, like limiting it to communicating information, or transferring, issuing the actual underlying unit. So we've got the international registry, the PACM, the one specifically for Article 6.4, and then various countries' independent national registries. And to what extent the actual asset should be able to be brought back and forth between these is a big question. And the US and others are also for having the underlying registries that many of these units are now held in, since the voluntary market players have taken a larger role in this. Those are depicted at the bottom here in those little ovals. Where and how should the assets be able to transfer from those to other registries, so they are considered the underlying registry. Now, the US and others are for maximum flexibility on this, for having the underlying registries, those ones that are not the national registries, be ones that can contain and transfer the assets. Developing countries, least developing countries especially, and the group CFRN, the ones with a lot of rainforest credits, they favor a scenario where the international registry has more functionality than just tracking or looking, this whole pull and view concept, because they don't have their own registry. The position that the underlying registries that contain the credits from projects like Vera, Gold Standard, etc., should have more of a role in facilitating transactions is very strongly supported by the US, which favors this flexibility. And the reason is that the US is in general in favor of giving more flexibility to voluntary private sector entities like this, because in the negotiations, it is looking to become a facilitator of private sector investment, which these entities do, counting towards or being recognized as carbon finance. So these large companies are facilitating finance to developing countries in the form of transacting credits or making credits possible. And this can be seen as mobilizing private finance when this is made possible. And the US is all about mobilizing private finance. So that's kind of a rationale behind the support of the underlying registries having more transaction capacity. And that's why parties take different views on this, because some care more about being able to have a registry and it's part of the international registry. Otherwise, they wouldn't be able to transact because they don't have their own. And others care more about the fact that the entities that are participating from the private sector are part of mobilizing climate finance. And so the Article 6 would be facilitating that if these registries were the ones that have a trading functionality. All right, so that's laying out some of the disagreements, and there's many different options in the text that reflect these different positions. And I think with that, it's a good transition to our discussion with Olga about where we stand going in. But first, let's go over the very exciting new developments under the SBM that was reached just a couple weeks ago and is going to affect how things going into the COP. Take it away, Fitri.
Yeah. So yeah, aside all of those, discussions and nitty-gritty, we do have one bottleneck solved already ahead of COP. So after a subset meeting, basically the Article 6.4 Supervisory Body adopted both the methodology and removal as standards, and moving forward, basically bypassing the need for additional approval by CMAs to prevent delays. But then again, because normally the procedure would be for CMA to actively approve, but this time, I think, and then obviously we can confirm this with Olga later on, but this time I think the process is a bit reverse, where instead of CMA need to actively approve, they have to actively oppose the standards if they want to not adopt the text. So there's an act of actively opposing the text here. And after that, what's going to happen next year? Because I think it's just important to clarify that the supervisory body did not develop approved methodology, because we've seen a lot of discussions, especially on LinkedIn, people speculating about what's going on, but yeah, they're not approving methodologies, nor that they have released an exhaustive list of acceptable CBR activities, because that is not what the removal standards is all about. And with that, I think that's a perfect transition, to our next segment with Olga, where we basically want to discuss, the whole nitty-gritty of Article 6 and what will happen with the 6.4.
A warm welcome to you, Olga. Thanks so much for joining us. So you will discuss with Lisa and Fitri. We have received a lot of questions already in the chat or in the Q&A. Please keep them coming. I turn the floor to you, Lisa, to lead the discussion now with Olga. Thanks.
Thank you. Well, so the first one is I sort of teed you up for a couple of things going through my slides. One is hearkening back to the Kyoto era and the days of when countries were transacting units such as ERUs. You remember those times. Do you have a feeling that the sort of vibe under Article 6, do other countries that are negotiating now see it as going to a time when everybody has a target, and so the countries that are looking to make a carbon trading deal either under 6.2 going bilaterally or trying to develop projects that will be methodologies that are then into 6.4. Do they see it as a zero-sum game now, and it's not just a country generating a bunch of credits that it hopes to sell? Are we in this feeling that this is a cooperative arrangement in that sense?
Thank you, and first of all, thank you for having me. Hello, everyone. To your question, Lisa, I do think that there is a feel that, you know, countries are more aware that, you know, they need to combine the work on Article 6 together with their work on NDCs. And if they have carbon pricing mechanisms, you know, this all needs to tie together and how their climate policies work. So it's a more centralized policy decision, as well as the way we see the Article 6 approval processes and sort of Article 6 policies emerging. You know, they are emerging as part of sort of larger government efforts, where governments have to rethink everything that they're doing on climate. And I think it's been quite interesting how, say, India formulated its priorities in Article 6 and how others have, you know, tried to sort of combine pricing and Article 6. So indeed, there is a feeling that, you know, now it's not just a country that's supplying, but a country that's also actively engaging in climate policy.
Got it. And on that note, when we were talking about registries and different countries having different interests in how the communication between registries can be structured, in the prep for this webinar, we had this analogy discussion. So I would like you to talk about your warehouse concept, because I thought that was a great way to visualize both the registries, what they are, and also why different countries care about having the warehouse differently.
Sure, but yeah. Probably when we get there, or do you want me to comment now?
Sure, yeah, I mean, because you mentioned IKEA. I love to hear about the IKEA concept versus the tomatoes.
I think it's easier than the Fitri if you can show the graph. I think that's yeah, and the you know, the fundamental worldview difference here is, you know, whether you have assets moving through the international registry or not. And I saw a question, you know, on whether CARP is synonymous with the international registry. And actually, the way it's been set up now in Article 6, international registry is more like a collection of national registries that have been provided by UNFCCC Secretariat. You can have registries like here on the slide, you can see, like, for example, the EU registry is likely to be not inside the international registry, but outside of it. UK, from my information, you know, they're planning to have a separate individual independent national registry that's not going to be part of the international registry. And the CARP and Article 6 database are sort of the data collection mechanisms that actually collect information on Article 6 transactions. And you know, the worst, well, the biggest issue really is whether the international registry is an asset registry or not. We know that, say, Article 6.4 registry, because it issues units and it's a centralized mechanism, that's an asset registry. And any country is free to set up and its own independent registry as an asset registry. But, you know, whether you have 6.2 as an asset registry hasn't been decided. And the analogy indeed is that, you know, it's like I looked at participant list. For those that are familiar with the concept of IKEA, right? IKEA can have warehouses, but if you ever been to an IKEA, you can actually log into their system and people will tell you, like the IKEA shop assistants will tell you where things are in the warehouse and how many of them are, and, you know, in which warehouse are they. So these are the two views. Is it the warehouse with tables and chairs, or is it just a kind of a tracking system that will allow you to see where things are? That's, yeah, there are, you know, I've heard Elisa say that, you know, some care that, you know, for them, having, you know, an asset registry inside the international registry is about the ability to transact. I think I would you know, nuance it a little bit, because you can have, you can maintain your ability to transact if you know, you're transacting from an underlying registry. So there's nothing would prevent you from transacting, you know, if your country, you know, and you're working in the GCM and that GCM is your cooperative approach, you will have your sort of registry part in the GCM where your GCM units are, right? Or, you know, or very even there's some discussion that this, you know, this registries could have, could hold the sort of these assets. But it's more about, I mean, but for some countries, if you have a national registry that's as an asset registry, that actually would prevent them from getting involved, because that there are legal repercussions for a government actively holding assets. And how does government deal with assets? So these are kind of the difficulties that parties have to deal with, and then they have to find solutions, you know, because some things work for some people, for some countries, and some things don't work, you know, and that's kind of a difficult negotiation process that the parties are in right now.
Exactly, and that's why parties have different views on these, and these issues are so contentious in the negotiations. Shall we go to a couple of the other, Fitri, did you have some questions?
I do actually, because like knowing, you know, all the nitty-gritty and all of the discussions or disagreements, if I may say, that are going on with regards to the whole functionality, the standardized infrastructure of Article 6. Olga, I'm just wondering here, do you think the lack of standardized infrastructure as such, you know, not having authorizations defined, or like not, you know, not having really a registries, do you think that impacts countries' willingness to engage in ITMO's transactions? And if not, do you think the Article 6.2 can continue without the standardized infrastructure? Because I think before we already see like a lot of countries already engage, you know, there's already some things happening on the ground. And in case, I mean, knock on wood, in case we have another disagreements during this COP, and we don't have standardized infrastructure, do you think Article 6.2 can still continue?
Well, I think the only piece that of the standardized infrastructure that's currently missing is the international registry. And, you know, the national registries that will be inside the international registry, right? What we see already, the CARP, you know, the centralized accounting reporting platform is already operational. There's a prototype version of it. And you can go in and you can see cooperative approaches that have been submitted. You can see authorizations that have been submitted. You can see annual information that has been submitted. Initial report. So there's a lot of information already, and Article 6.2 is alive and ready and proceeding. I think right now is the, you know, reporting and information flows are not ideal. It would be better, you know, if negotiations progress for transparency's sake. But you know, I wouldn't speculate. You know, what if nothing happens in Baku? I don't think that's a likely scenario, to be honest. I do think we're coming away with something from Baku. That's at least my feeling from the room.
May I jump in with a couple of questions? We have a lot of questions from the audience, if I may start. A lot of them are on interaction with the voluntary carbon market. I'll turn to that in a sec, but just one question. It's per Lisa's comment on selling countries needing to prove that they can sell an ICMO because they are still meeting targets. So how did Thailand demonstrate this with its e-bus trade with Switzerland? Or do you have any other concrete example of how it worked until now?
Yeah, this goes back to the the corresponding adjustments, which we in the background have been trying to figure out how countries are actually going to do it in good faith. And that is one of the reasons that they need clarity on this process. If we go back to the timeline slide with the authorization versus first transfer, or the path from one to the other, at some point in there, if an ITMO is sold or promised to be transferred to another party, the corresponding adjustment has to take place. And if a country in good faith, like Thailand in this case, did a deal with Switzerland on e-buses, it ring-fenced those credits, so took them out of, marked them in its own inventory and set them aside in a sort of separate part of its registry to say, these are marked. We are clearly saying that we are going to correspondingly adjust for them. But what does that mean? What does Thailand's government actually do to correspondingly adjust or to apply corresponding adjustments? What does it mean for setting the NDC? Where do they get sort of taken out of the accounting? And that needs to be clarified in the process here with the biennial transparency reports. Thailand can report in the transparency report that those have been sold, that those have been separated. But because in Thailand's case, it was part of the transportation sector, which is not necessarily covered by its NDC. It depends on how you interpret the definition. Many countries are in this position. We saw the Guyana transaction for Corsia, where emission reduction credits in the forest sector were clearly marked as having been reduced in Guyana and are eligible to be used for Corsia. But what does the government actually do with these credits? They've been marked for that corresponding adjustments will be applied to them, with them, from them. But the actual act of doing so is still uncertain. And what these different definitions of authorization and when the different procedures happen in this timeline of transferring is key. Once there is more clarity on that, I think countries will be able to sort of in good faith or with their own NDCs in mind, actually undertake these transactions in a more clear way.
Thanks, Lisa. Another question: is it fair to describe an ITMO as being identical to today's offset certificate in the VCM, but with the additional attribute of being counted against the particular nation's NDC? Any takers for that one?
I figured Fitri was going to tackle that one.
But yeah, okay. I think it is actually a very tricky question. I mean, I don't think we can really compare, ITMOs versus VCUs, or VCUs as very carbon units from Vera or gold standard versus others, because obviously there are different, and please do, Olga, correct me if I'm wrong, but obviously there are different process that is happening, very, very different process that's happening, as we can actually see here, when an ITMOs is formed versus when an offset credit is formed. Because before the ITMOs actually, you have to have like an authorizations, first transfer, authorizations, and initial report, AEF submission, and so on. And there are lots of process, there are lots of governance going on to actually be able to generate an ITMOs, to transfer an ITMOs. I'm not saying that it's not the case with the VCM. Obviously, there's also, there is also a certain mechanism and standards happening in the VCM. But then again, I would say to put, VCM plus corresponding adjustments equal ITMOs is a bit of an unfair definition of the two.
Olga, one for you, just also on the relation with the VCM. Considering that voluntary registries have traditionally filled this void that Lisa talked about, and the recent controversies around overcrediting and transparency. Do you believe that the introduction of a UN-backed mechanism will lead to a shift in voluntary demand away from registries? Could we see these registries gradually die, as happened with the CDM?
It's a good question, actually. I do think that we'll have to sort of justify in a better way sort of how different they are. But you know, all of us, majority of us maybe, who have lived through the Kyoto Protocol times are very aware that UN institutions can have issues. You know, there can be capacity issues, there can be timeline issues, and there could be also sort of, you know, they can be general unhappiness, for example, in the market and how certain things are interpreted. You know, there's definitely a role for independent registries that existed before to continue existing, but they will be looking at sort of at the centralized UN process for comparison. You know, some things they'll be doing differently, and think it's very healthy to have competition, you know, that everybody's doing better in terms of assessment, in terms of approaches, in terms of safeguards assessments, you know, remediating of reversals, etc. All of this, basically, you know, it's good to have multiple centers of gravity, so that you are not stuck with one specific one. But of course, you know, eyes will be on the UN and how UN interprets most of the Glasgow decisions.
Another one on touching on the same topic. So when a private sector entity wants to use Article 6 credits for purely voluntary purpose, so outside the CORSIA situation, how would the bookkeeping look like if only parties can be the user? So a country where this private company is located would put this emission reduction with corresponding adjustment and allocate it to this private company, or is this still also in the fog and we don't know how we can put this kind of deal through?
I'm chomping at the bit to address that one.
Right. Well, it's actually quite clear, because the rules, modalities, and procedures that were agreed by parties in Glasgow specifies a use case, which calls other purposes, and that's exactly for this case. If somebody wants to, like, you know, private sector using Article 6 credits, voluntary purposes, they would need to be authorized and correspondingly adjusted, but then retired somewhere, you know, where this unit is. I think we haven't yet seen this happen, but from my understanding, the independent registries where that, for example, that can happen, they're working on arrangements for this. It obviously can happen in Article 6.4. That's quite easy, and there are draft registry procedures for that as well. And for Article 6, if that comes out of the national registry, there would be a possibility if that's an asset registry.
This goes back to the claims discussion that we had, where under Glasgow there was the space made for a different type of credit, one that does not have corresponding adjustments applied. That is one that a private sector entity that wants to make a claim that it has, I guess offset is the wrong word, because that's the problem. You're claiming an emission reduction that has already been attributed to a country's inventory. But we have the mitigation credit that a voluntary entity can use. So if a company makes a claim on reduction and it's not claiming that it is one that has been correspondingly adjusted for, then that's absolutely fine. It's just when it says that this is a UN-backed credit and therefore constitutes an offset of the private company's own emissions, if it's a UN-backed credit, it has already, that corresponding adjustment has been made. So that's when the claim you can make for it being UN certified or Article 6 compliant, there has to be a corresponding adjustment associated with that credit in order to be able to make that claim. But private companies seeking to meet environmental claims of being green or having contributed to countries' efforts to reduce their emissions can say that legitimately without having to have a corresponding adjustment associated with that credit. It's basically, you can characterize it as a donation or as a support for developing countries meeting their climate targets, or any country meeting its climate target, from which that corresponding adjustment took place. So a lot of it is a semantics issue about what claims are being made versus what units are actually being transacted.
I would disagree with Lisa here, because I mean, for us who are in the European space, it's quite strict on what can be said, you know, on claims specifically. And there's also been initiatives, you know, which we don't know where they will land exactly on the, you know, what needs to be correspondingly adjusted, what's not. But you know, I would separate very clearly is Article 6.2, it has to be correspondingly adjusted. There was a decision made in Sharm el-Sheikh that in Article 6.4, which is a centralized UN mechanism, you can have units that would go through certification process of having results achieved, right, and verified. And then you can have an option of not authorizing these units and having them, they're called mitigation contribution units. So it's a contribution claim. You can possibly generate units through independent registries, like Vera independent standards, are probably correct to say, like Vera and Gold Standard they would also not go through corresponding adjustments, and would not even sit anywhere close to Article 6, but they would be similarly contribution claims. So this kind of, to me, it's like three different sources. One is 6.2, the other one is 6.4 when you have contribution claim, and then the independent voluntary standards where you can also have contribution claims. But in terms of what can be said about exactly sort of how they're used and what it means for the company, they, you know, now EU regulates that, so that would be tricky to globalize that approach.
Thank you so much. I am afraid to say that we have reached the hour. We have a hard stop at 2 o'clock now. So I think we could have gone on for much longer, and this is super interesting. We'll have to do that another time. So thank you so much, Olga. Thank you so much, Lisa and Fitri, and thank you to everyone who listened in and for all the good questions. This topic is not going away, but I hope you have a good intro to what's going to happen in a couple of weeks at COP29. Thank you, and have a nice rest of the day, everyone.
Thank you.